Metaverse tokens have a $18 billion market cap, but we're not quite at Ready Player One yet. The metaverse needs a better definition for it to work properly, Vitalik Buterin said at the BUIDL Asia conference in Seoul. People associate the metaverse with VR, but there's more to it than that. Ethereum's Vitalik Buterin says that metaverse isn't what we think it is. The metaverse is broadly understood as a virtual decentralized world with immersive social settings and experiences that utilize avatars, virtual reality, VR, and augmented reality, AR, technologies, with blockchain technology being the tie that binds this all together. The metaverse is poorly defined and often seen more as a brand name than a product. It's envisioned as a virtual universe where everyone can participate and is not owned by anyone, Buterin said on stage during the BUIDL Asia conference in Seoul. It's frequently associated with virtual reality, where needs are simpler, akin to wanting a laptop without the laptop. Buterin continued, arguing that while the metaverse is often associated with virtual reality, it's not the be-all and end-all of the metaverse. It's super useful but not really a verse, he said. For the metaverse to work properly, we need something that combines all the different virtual world elements we already have, including crypto, virtual reality, and some AI parts, in the right way, he said. Also, on stage at BUIDL Asia, Buterin said that if account abstraction is going to become mainstream, it must balance security and convenience, something that Ethereum doesn't yet have in place. Record $1 billion exited crypto funds last week, CoinShares. The action was a break from what had been a record 7-week string of inflows. The outflow last week totaled $942 million, according to a CoinShares report. Altcoins fared better last week, with $16 million of net inflows, notably into Polkadot, Avalanche and Litecoin. Digital asset investment products witnessed record weekly outflows last week after billions piled into the vehicles over the past few months. Led by $2 billion in exits from the Grayscale Bitcoin Trust, GBTC, last week's crypto fund outflows totaled $942 million, according to CoinShares. This broke what had been a record 7-week string of inflows of $12.3 billion. Last week's outflow came alongside downside volatility in the price of Bitcoin, BTC, which tumbled below $61,000 from $73,000 just days earlier. We believe the recent price correction led to hesitancy from investors, leading to much lower inflows into new ETF issuers in the US, which saw $1.1 billion inflows, said CoinShares. Partially offsetting incumbent Grayscale's significant $2 billion outflows last week. A Coinbase research report echoed CoinShares' take, saying that the driver behind the surge in outflows was GBTC, noting one source of potential selling pressure from the bankruptcy estate of Genesis Global, which holds tens of millions of shares in the fund. Recent Doge price developments are strikingly similar to those seen in late 2020 when the meme token bounced from a bear market to rally over 1,000% in early 2021. There are striking similarities between Doge's price action today and in late 2020. The so-called fractal is noteworthy as Dogecoin surged over 1,000% in early 2021. One key principle of the Dow theory is that asset price trends are self-repeating, functioning along Mark Twain's famous quote, "History never repeats itself, but often rhymes." Hence, traders often check if the ongoing price action resembles anything from the past to understand what lies ahead. Dogecoin, the world's largest meme cryptocurrency, has recently risen above the widely tracked 50, 100, and 200-week simple moving averages of its price, ending a prolonged 20-month consolidation at bear market depths. The 50-week SMA has moved above the 100-week SMA, signaling a bullish shift in momentum. Both developments are strikingly similar to those in late 2020. The so-called fractal is noteworthy because Doge witnessed an explosive rally in the first 5 months of 2021. Doge spent 20 months in the depths of the bear market, between 5 and 15 cents, before breaking higher from the range late last month. A similar 20-month bear market consolidation through the second half of 2019 and 2020 set the stage for a big rally in early 2021. Back then, the cryptocurrency chalked out 3,600% surge to 37 cents by May 2021. So, if the 2019 to 20 fractal is a guide, Doge's path of least resistance could be on the higher side. A closer look at the chart shows that Doge's uptrends are sharp but rarely last more than 6 months. Meanwhile, the subsequent crash and the bottoming consolidation process take nearly 3 years. Another similarity between now and 2020 is that major central banks, including the Federal Reserve, are widely expected to cut interest rates in the coming months. The expectations for renewed liquidity easing bodes well for assets far out on the risk curve. In 2020, central banks worldwide had rates pinned near zero. Still, past data is no guarantee of future results, especially with non-serious cryptocurrencies like Doge and other memecoins. A potential bearish turnaround in Bitcoin, the crypto market leader, could single-handedly drag Doge lower.